The question is financing growth in Europe. And as Yannis said, we need investment, we need more investment, and we need higher quality investment in Europe. And what are the conditions that will lead to that? I think for the first question, which is the conditions, as also Yannis mentioned, the lessons of Greece point a little bit to the direction that Europe should go in. And what do I mean? Greece gained investor credibility.
Say that again, sorry.
Greece gained investors' credibility.
Right.
How did it do that? One is the fiscal effort. Primary surpluses of 3 to 5% per year, year after year, including, as the Prime Minister said last night, meeting the defense targets of Europe. One of the few countries, one of the top 5 countries in meeting defense spending, despite having the primary surplus. It has done structural reforms. It has introduced a digital economy, many important steps in the digital economy, many important steps in the energy transition, has done great work on tax reform and tax collection. I can go on, but there was a successful structural agenda. And the final sort of requirement, I think, is political stability.
Yeah.
We have had political stability, not just in having one common government, but even the opposition is not at the extremes, as we've seen in other countries, dragging the discussion to non-sustainable solutions. So I think the confluence of these characteristics is something that Europe should look at, because they're not having a strong fiscal, quite the opposite, the fiscal is weakening. Very little effort, great effort, less success on Project Europe and other structural reforms within each country. And the politics, as we heard last night, was it 27? And 2027, we're going to have 10, 15 European elections with unknown results, as you said. So I think the path that Greece has followed, I think, is something that, if Europe can follow, it would benefit in terms of creating the conditions for investment. Now, the other thing is the quality of investment. And here, when we look at the US, and we often look at the US as the example, you see that fixed investment has 40-50% of high quality investment, compared to Europe, where it's about half that. And that, I think, is one of the reasons that the US is seeing such high productivity growth compared to Europe. So how do you get higher quality investment? And here the question is, again, the capital markets union. We need more risk-taking by the capital markets. The banks are not best placed for that. We have the deposits of the retail market, the mutual funds, they have the money of the retail market. That cannot be placed in high-risk investments. We need more private equity, more venture capital. If the conditions are right, they will come and they will invest in higher quality investments, and that will lead to productivity growth. So we need progress on that front, and let's hope that we can get over the 2027 politics and get down to introducing some of this stuff. And with that, I will stop.
Okay. I'm going to ask you a question I asked Prime Minister Mitsotakis in Crete, and I'm not sure he was entirely happy with the question, but I'll ask you to see how you feel about it.
That sounds like trouble.
It does, but I promise it isn't. You've mentioned, a lot of people have mentioned, the success of Greece at the moment. If you sort of took a cross-section of the Greek economy today and compared it with 10 years ago, you would say things are looking good in pretty much every indicator. But of course, 10 years ago, things were looking really, really bad. And Greece went through a terrible period, real genuine popular suffering in this country during the crisis. Does Europe need to feel more of a sense of crisis in order for it to have the motivation to do the things that need to be done to achieve what Greece has achieved?
Oof, that's a tough question. In my previous life, I worked at the IMF, and I always worked on program countries. And there was a sense that the countries that had difficulties were the ones that implemented the most far-reaching reforms. So in many respects, yes, pressure works. I mean, we all work best under pressure, so maybe a bit more pressure works. But how much more pressure does Europe need? You're seeing China and the US go further ahead. We were thinking Trump would give us a wake-up call, but I don't know. Has it occurred?
Yeah. Well, let's stick with you for the moment, but I'll come back across the whole panel for this question. We've heard these words: should, needs to, must. These are all the things. We know what Europe needs to do, what it should do, what it must do. Why isn't it doing it? So where are the obstacles? What are the blockages in the way to these obvious solutions of capital market union, banking union?
I will say something that will get me in hot water. You cannot have unanimity in governing Europe and expect execution. You need some form of majority, reinforced majority voting across countries. I know it's anathema in Europe to say that, but it's very hard to work with unanimity on these issues.